Good morning everyone, this is Iosif, analyst at IronFX, bringing you the morning comment for the 5th of December. Sterling trades in a turbulent manner. The British pound surged during the European morning yesterday ahead of the meeting between EU Commission President Claude Juncker and UK Prime Minister Theresa May, amid expectations about good news regarding a Brexit divorce bill deal. However, it plunged back down a few hours later after the two officials announced that despite the significant progress, it was not possible to reach a complete agreement. The fact that an agreement has not yet been struck could prove of little significance though, as common ground and a deal could well be found in the next days. As such, we expect sterling to remain volatile and headline driven. Should there be a deal on the divorce bill soon, the currency could rise somewhat further. However, we remain cautious about a healthy rally in GBP, as many uncertainties regarding the Brexit deal remain. Specifically, even if the negotiations move on to the more complex subject of trade, there could be new disagreements there, which could keep any rallies in GBP limited. RBA remains pat, appears more optimistic though. The RBA kept its interest policy unchanged today, as was widely expected, while the statement accompanying the decision had a clear, more optimistic tone than previously. With regards to the labour market, officials stated that employment growth has been strong over 2017. Meanwhile, even though the bank stated that inflation remains low, it removes a sentence from the previous statement that inflation is likely to remain low, indicating some optimism regarding the future prospects for prices. As for the exchange rate, the bank toned down its language regarding AUD, noting that the Australian dollar remains within the range that it has been in over the past 2 years. AUD/USD gained ahead of the decision on the release of retail sales data for October and rose further on the news. Today's highlights. During the European morning, we get the UK Services PMI for November, and expectations are for the index to have declined. That said, the risks surrounding that forecast may be tilted somewhat to the upside, considering that both the manufacturing and construction prints surged by much more than expected during the month. A potential positive surprise in the services print, which accounts for the vast majority of the UK economy, could bring the pound under renewed buying interest. We also get the final services PMIs from several European nations and the Eurozone as a whole for November. But given that the final prints are expected to confirm the preliminary estimates, any reaction in the euro is likely to stay limited. The bloc's retail sales for October are also due out. In the US, the ISM non-manufacturing PMI for November is due out, and the forecast is for the index to have declined but to still remain at a very healthy level. Even though such a pullback could hurt USD somewhat on the news, the currency's forthcoming direction will most probably be decided by developments on the tax overhaul front and specifically by any progress in the reconciliation progress between House and Senate. We have only one speaker on the agenda, ECB Governing Council member Jens Weidmann. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel or circle us on Google Plus to get more trading ideas. This is Iosif, analyst at IronFX, wishing you solid trading.